and talk to you again around 10 a.m. Mahesh Patil is with us now, Co-Chief Investment Officer at Aditya Birla Sun Life AMC. Mahesh, good morning. Thanks for joining us. So the market's seen so much pain, both global and local. But do you get a sense that we are closer to the bottom, or the worst has already passed us? Do you get that feeling?
So I think we've seen a lot of negative news flow in the last 1 month or so, both on the domestic as well as on the global front. There is definitely a slowdown what we have seen. So again, in this quarter numbers, if you look at, there have been a lot of disappointments. We've seen earning downgrades to this year's earnings, and the recovery from here will be very slow and gradual. We don't see any immediate triggers for that. So while the market the Nifty has seen a decent correction, which was kind of holding on well earlier, I think near term I don't see any immediate positives for the market to really go up. It might probably consolidate. I think if it's a question of confidence, right? I mean, there is confidence is lacking, and that's also impacting the consumer sentiment. We've seen demand weak across the board. So I think narrative needs to change over there. And while the valuations are now looking fairly exciting at a lot of stocks, if you look at across the board, there are many companies which are looking at valuations which are at levels, which probably would have seen around 2014 or so, when the markets were at its bottom. So clearly it's a time to start buying and into stock specific, but for the broader market I think it will take some more time to consolidate. I think post in the second half, post the festive season, if the consumer demand picks up, and that's the time when I think market could probably bottom out and look higher.
Okay, actually I wanted you to parse for us this NBFC move.
Sure.
Just a minute before that, the first high got sold, but the first dip has also got bought. So market now in a fine spot. The bulls are kind of re-emerging. But parse all those moves for us, the priority sector, the first loss guarantee by the government. How does that change your stock picking?
In the NBFC space?
No. Generally, I mean, I guess consumption, whatever. I mean, the field is open.
No, I think it's important, to get the credit cycle back, because that's the another main cause of the problem, because it's percolating down the line. It's not the NBFCs or the retail demand. It's impacting businesses also. Small businesses, SME businesses are getting impacted, and that is further hitting down in terms of jobs, in terms of confidence level. So I think it's important to get the NBFCs up and running and get the confidence there, because there's a lot of fear in terms of lenders and borrowers. And some of the measures what the government proposed in the budget, I think the implementation of that has still not happened. As you mentioned about the 1 lakh crores in terms of the first loss guarantee, there were no guidelines to that. Right, I think that came yesterday. So hopefully that should provide some relief to that sector. And I think if we see some resolutions over there are a couple of resolutions for the large NBFC which has been worked out. I think that will provide some relief to the market. So I think it's important to get the NBFC sector, the credit sector running, because even the banks are now probably a KG in terms of lending credit, even to the decent size.
Actually, yesterday we had Jayakumar with us, Bank of Baroda Managing Director, and we asked him, and he thought DHFL is on its way to resolution. Well, I've not heard from SEBI, right? So in spite of it, today meeting can yield anything positive?
Yeah, I mean, let's hope that. I think there's something positive over there, because all the lenders have to really come on board, right? There are different category of lenders which are there. So obviously there's an effort by the banks and everyone to really come with a resolution plan and see that it's an orderly kind of...
But only IRDA has given. PF, one of the pension funds also is asking for the money in advance. PFRD has not asked you all to join the creditor agreement.
So I'm not aware on that front, but I think clearly the efforts are made with all the regulators, whether it is the RBI or the IRDA or the SEBI, to come on board and then work on this resolution. But I think important, the regulators also work, and because a lot of resolutions we have seen that have taken a lot of time, and if you lose time, then the value which is there, I think, starts to erode, and then it's been difficult for really to salvage and get something out of that.
Okay. Well, by the way, for now, the stock that's really taking a hit is Bosch. It was down about 6% yesterday. It's fallen to a new 52-week low today. It's down about 2%. So Bosch should come up for you. Even Bharat Forge, in fact, is at a fresh 52-week low. Mahesh, hi. Good morning. I wanted your thoughts here because the commentary is getting incrementally worse. Bosch just told us that it is a structural slowdown and not a cyclical one. Bharat Forge also indicated that there is still a lot of pain. Would you stay away from this space entirely, or would you still look for some pockets of value?
I mean, you're right. So we are not still seeing any signs of things bottoming out. Even in this month, also in the month of August, also the indication is that still it remains weak. So again, it's a question about confidence. We're seeing the demand has been deferred, and I mean, things could change if the confidence comes back. If we see stability on the liquidity side, I think you could see things improving. I think the numbers what we are seeing in the auto sector, which shows around 25% kind of a 30% kind of a decline, I think that's kind of a touching the bottom. There is some inventory build-up also which is there, which needs to get cleaned up, and I think in the next 3 months, I think after the festive, I think you will see a significant ramp down in inventory because of, again, the new Euro norms are coming in, so you can't carry that inventory in the system. So I think that it's still not giving that confidence that things have bottomed out, but I think looking at the slowdown and the degrowth what we are seeing in the cars, I think that's a sector which probably should bottom out early. I think commercial vehicles will take some more time because I think there we have seen a good cycle earlier in the last 2 years. Right, and normally the cycle when it starts to slow down, it lasts for another 2 years or so, and looking at the slowdown in the economy, I think commercial vehicles will take more time to recover from here. I think cars should probably bottom out early, I think in the second half or so. And two-wheelers, again, the picture there remains a bit uncertain because that's where the bigger impact is there because of Euro 6 norms in terms of price increases. So I would say stock specific, yeah, one can start looking at the auto sector. I think the current degrowth what we are seeing should normalize. I think next year I think the growth should come back to around 6-7% volume growth, and I think good stocks in that space, the market leaders in that space, should be able to again gain back their growth momentum.
Okay, but the stock of the moment now is Manappuram Finance. It's now surging, in fact up almost 6.5%. So of course good results, and there were shorts, and this morning the NBFC, in fact, and across the board the good NBFCs are doing well today. The ones which have outperformed, the likes of Shriram Transport, Manappuram itself, M&M Financial, is clearly quite a bit of buying which is visible. Mahesh, before we let you go, I just wanted your thoughts on pharma. It's once again become very volatile. The large cap pharma today's top losers are stocks like Sun and Dr. Reddy's.
So in the pharma sector, I think if you look at, there are two parts to it. One is the domestic pharma, and then the export-oriented companies, especially the US generic space. I think domestic pharma has actually shown decent performance. The numbers have been fairly good. We've seen around 10 to 11% kind of a top-line growth, even margin improvement for a lot of players. And the numbers also for this month, what we are seeing is there is a decent volume growth. So I think domestic pharma is a story which we've been positive now for quite some time, and that's playing out fairly well over there. We see steady growth over there, and also with the government focus on insurance going forward, and that sector should show a strong, decent growth. On the US space, on the export side also, I think things have kind of steadied out a bit. The pricing pressure, what we are seeing in the US generic space, has eased off. So that should be good for even the export-oriented companies if you take a 2 to 3 year view. But again, there it will be more stock specific in terms of what is the pipeline of new product introduction. Okay, what will that contribute for the loss in the US generic market? I think so. I think one has to really look at from that perspective, and I think you'll see a lot of companies now start to cut down on the costs. So like results, what you saw, a couple of they've cut down on costs, on R&D costs. So some rationalization costs should help to better the margin, because a lot of investment which has happened in R&D in the last 7 years, I think if they don't see that kind of returns, I think you'll see some cut down over there. So I think pharma looks fairly okay in this current market environment.
Okay, Mahesh, we'll have to leave it at that. There's also Amit Kalyani waiting by. Thank you very much for joining us. We are discussing automobile ancillaries and